Hi everyone, welcome back to Crypto Cash. Thank you very much for joining me here. Happy Friday to you and your family. Hope you're having an amazing day regardless of how terrible the market has been recently. Trust me, a lot of us are feeling it. Unless you shorted from the top, there's a lot of unfortunate liquidation levels and things that were hit very hard yesterday. So my positive sentiment goes out to you. I hope that you can, recover from that, of course, whatever it is that you were dealing with. My portfolio is slightly damaged as well, but it's not terrible because of the fact that I use low leverage and typically low position size. Okay, so again, if you follow my strategy, you should be okay. But once again, yesterday was a little bit more severe than we expected, and we blew straight through any potential support levels that were there, right? And I did mention yesterday too that if we lose that support there at about 21,500, it should be a free fall. And unfortunately, it jumped right on down there and even dropped past the support at 20,500. That's potentially a new resistance level. I'll explain more about that here in a minute when we look at liquidation levels, but generally speaking, those are some things to kind of pay attention to. So here's where we're at. Let's go ahead and jump right in. Again, I've been trading for a very long time, so if you're new to the channel, obviously feel free to become a community member. But I just want you to know that I've been trading for a very significant amount of time, and in my time, this is a very common characteristic in crypto. Okay, so trying to be super floored or surprised by this, it definitely happens. The important thing is risk management and risk tolerance. Those are all things I teach in my trading academy, so be sure to check that out. And obviously, got some good sponsors as well. Check that too, because we have a trading competition for Bybit occurring here very soon. Be sure to be on the lookout for that. So when it comes to Bitcoin here, what we want to do is take a look at a handful of factors. First things first, we want to go ahead and take a quick look at the liquidations and just kind of get perspective on this. Okay, so let's go ahead and show you what's going on here. So when it comes to, let's scroll up a little bit here. When it comes to liquidation levels, first of all, this is the last 7 days of liquidation. Okay, so just kind of taking a look back here, we can see the last 7 days. If we kind of zoom in a little bit, you can see there's a tremendous amount of liquidations initially at 21,500. That's when the price first dropped sometime yesterday. That was a couple of days ago, but we lost that level and the price continued lower pretty fast, right? So right here yesterday, the price kind of came down and dropped even further, massive drop. But what you can see here though is it wasn't a lot of liquidation until we hit the range of about 20,200. Okay, so a lot of support was right there in that level. Now, the market movers understood this, and they were trying to fill that CME gap that I've mentioned previously from a couple of months ago between 19,800 and 20,500. So that's why we had this absolute free fall here. It was just nothing but profit being taken because we had that large gap here. If you can see, a large gap here from Bitcoin jumping up very hard, very fast over the weekend a few weeks ago. Okay, so again, that's half the reason why that occurred. That's a very standard process that happens a lot. Unfortunately, gaps get filled quite frequently, whether it's months or days later. It will happen almost inevitably. Okay, so now that gap is filled, what's going to happen next? Well, it's hard to say specifically. We'll take a look at the charts and kind of see. But something I do want to kind of show here and point out is the amount of liquidations that occurred yesterday. You can see that right here. Aggregated across multiple exchanges, we saw a dramatic amount of liquidations, probably the most we've seen in some time. Now, we had some liquidations here, of course, with this increase, but equally amount on the way down. And as you can see, there's only one large green candle here previously to push the price up. So shorts got squeezed out that day, right? But longs got squeezed out 1, 2, 3 times total in the last like 10 trading days. So it's been a mess for longs, okay? So I don't blame you for longing because we should have continued higher, but a lot of fundamental catalysts occurred early in the week, and that really screwed things up, okay? So inflation, the whole 9 yards, you can see an instant difference here between the trading days that we had starting Monday and then everything since Tuesday when we had that Fed meeting, so to speak, here from Jerome Powell that just pretty much wrecked the market. So fear, uncertainty, and doubt is extremely high, or the fear and greed index is low, which basically tells us that fear is high, and open interest is low, liquidations are high. There's really nothing positive about this. Okay, so I know I'm kind of preaching to the choir here because I'm sure you probably are aware of that. We all saw what happened yesterday if you pay attention to the markets. But generally speaking, that is kind of going on in the back end. Now, what's going on in the front end here is some positive stuff to an extent. Now, again, we had positive stuff yesterday, and where that got us, right? Again, there's no 100% in trading, but looking at the fundamentals first and kind of some back end stuff, and then concurrently looking at the overextension that we're seeing right now will give us some sense of reason here. What I mean by that, if we take a look at TD sequential, big surprise, sorry, super zoom there, we're at a number 9. Now, traditionally speaking, Bitcoin will hit a 9 and tend to reverse itself in most cases. Again, most cases isn't exactly correct because obviously you can see here we hit a 9 here previously. While this is a very slow little run, there was a tremendous amount of uptick as well. But if you count this here, there's technically 9 days of trading before it took off. So it really was a full 9 when you think about it. What I'm getting at here is that this push to the downside is extremely overextended. We are below 30 now in the RSI. That tells us that buying the dip, quote unquote, is typically a beneficial factor. What I mean by that is anytime you see the RSI below 30, it will typically recover itself within a few weeks. Now I say a few weeks because unfortunately, that's not going to happen right away for us right now because you take a look here, right? RSI came down to 30. The price hit right at 15,000. It's kind of our darkest moment, right? And then the price slowly edged itself up and then figured itself out. So hypothetically, we have a similar circumstance to that. We could see something along these lines moving forward. Okay. So again, I don't think we're going to see a significant increase, but I certainly don't think we're going to see a retest of 15,000 right now. And a lot of reasons why I feel that way is just because we have a decent amount of volume. A lot of those, a lot of the bears have sold as much as they possibly can. They have nothing left to sell for the moment, right? So they're going to start buying and accumulating and potentially sell again. But for right now, based on support, minus this area down here, you can see there's a lot of volume at the range between 19 and 20,000. Okay. So again, to me, volume speaks very loud. No pun intended there. It's definitely something we want to pay attention to or listen for. That was a pun that was intended. And I can tell you, if you look and listen for volume, it's going to really, kind of help you out a lot. And that's why I look at liquidation levels, etc. Those are all volume related too. Okay. Either way, that being said, potential bounce off of 30. Previously in Bitcoin's history, when it hits 30, it'll usually recover within time. Okay. Now again, there are instances where it hits 30 and it goes straight sideways and down. There's no guarantees it's going to bounce. But I do think a slight relief rally could occur, maybe to 21,400 in the immediate future, if we can break 20,200 first. Okay. So again, that level, 20,200, remember, we kind of looked at this here. It is a strong liquidation area, which basically tells us there's a lot of resistance there now because we've passed that point. So you can see already that the price wicked up and it's already gotten rejected off that level. Okay. So just something to be aware of. Okay. So I wouldn't expect Bitcoin to run back up anytime soon. If you have open positions and you're comfortable with holding them for longer, then I would recommend leaving them open if you don't want to take the loss. Otherwise, it's probably best to cut your losses. I talk about that in my Trading Academy. It's a very difficult thing to do. I've cut some losses here recently for some of my trades, mostly just taking a small percentage of my open trade out, right? So I have a lot less affecting my overall trade position, because again, this depends on if you're using it as isolated versus liquidated, or isolated versus cross margin, right? Those two different things provide different results. But if you're a cross margin, you can either add to your position, which isn't always recommended, or trim your positions and lower your overall effective size towards that of your portfolio. All right, anyways, stuff to kind of think about, a lot of interesting things. So I'm just touching on this because some of my community members were affected by this, and it's totally an unfortunate thing that happens. And this is how trading works. You got to kind of learn to rise above and brush it off. I know it sounds easier said than done, especially if this was a big deal for you and you took a long time to build that portfolio. It can all be gone in an instant. That's the problem, and the good and bad thing about trading is you can blow up your portfolio either up or down. All right. The trick is to minimize your loss and work within your risk tolerance, and those are things you have to discover for yourself. All right, 4-hour time frame, extremely overextended here. Look at that, 10 on the RSI. That is completely nonsense, in my personal opinion. I just think it's really ridiculous how hard this hit, how fast it hit. We are already down the dumps and just pushed down even further. But again, a lot of fundamentals that push this down further. I do not foresee, or I do not believe that we would have this issue if it wasn't for that fundamental. In fact, this is right here. This is the candle wick that started it all. This doji candle here sent everything down south. This is when Jerome Powell basically gave a speech. Okay, so again, those things tend to factor in. There's also Mt. Gox and a lot of other things too factoring in too. Don't get me wrong, it's not the only thing, but it's all backdoor stuff or things behind the scenes you don't see right away. Unfortunately, technical analysis has its limitations there, and you cannot anticipate it based just on the charts alone. That's why we like to look at volume and liquidation levels and different things, open interest, to kind of keep us aware of things. So here's some slight positive consolation here. Potential convergence on the horizon. This is starting to diverge here, so or, converge for lack of better terms. We're not anywhere close to a massive sweep, but I can tell you that there's a decent chance we're going to see a slight recovery here. Once again, 20,200 probably be the most immediate level to test. we can break through that level, 21,400 would be the next sites here. We'll redraw out some new Fibonacci retracement levels later, but for right now, that's effectively where we're at. Not, again, terrible, but not great. Okay, so the 4-hour does have some positive factors here, but I would not expect a miracle. I don't expect the price to come back anytime soon. Okay, it takes a while to recover. Oh, this is the time for a good analogy, right? If you've been watching my channel for a while, you would know what I'm gonna get at here. Basically, I like to give the analogy of being injured, right? For example, so just say you were walking downstairs and the last couple of steps you trip down and you kind of fall and you maybe bang your knee a little bit and you get up and you brush it off. Probably, embarrassed. You're probably not feeling great if somebody saw you fall down the stairs, but you didn't fall all the way, right? You kind of just fell a little bit, right? And most of these things here, these little guys here and there, these are just those little falls, right? When it comes to something like this, a significant 8% correction in one trading day that shakes the entire market, that is falling down the entire flight of stairs. You're probably going to be wheelchair bound for some time. You may recover in time, but it's going to take a while, right? You're going to have to learn to walk before you can run again. That's exactly what's happening here. Bitcoin fell down a flight of stairs, and it's going to take a while for it to come back up. I do not think this is realistic. I think it's realistic to see this, and then potentially work our way up slow and steady. A strong, significant rally, unless there's amazing fundamentals pushing the price action, there's no reason for us to expect otherwise. Okay, just get that in your head. I hope that makes sense. All right, so taking a look lastly here at TD sequential, like you can see, big old surprise. 1 to a 9. Get a little bit of reset, back down to a 7, and then over again kind of for some choppy price action. So we are seeing a lot of 9s on TD sequential here, and that does tell us essentially that we're in a position right now where we are overextended to the downside once more. Big surprise. We all know that. But if we take a look at the Ichimoku cloud, if you have a short position open, it really just says to leave it open, but you shouldn't leave it open for too much longer, because if the price keeps going sideways for some time, it could come back up and break itself through to the next resistance level. So basically just telling us that if you have a short position open, you can keep it open for a few more hours, but if the price doesn't go down any lower soon, you may want to consider taking some profit. That's a beautiful thing about the Ichimoku cloud. I have a video on this. It's in my Trading Academy as well, and it's just one of those things that's awesome to see how it works so well and effectively. But it does show that we have a tremendous amount of push to the downside. We have a lot of momentum, you could say, and we're well below the cloud. And as you can see, the cloud is consolidating right at 20,400, 20,200, this little range here. So 20,200 to 20,400 will be a resistance channel we need to be mindful of. Okay, so in our next video, we're going to probably draw some new Fibonacci retracement levels, but keep in mind this is still retracing, so there's no reason to draw out a new chart just yet. And we want to see where this goes first, because it could absolutely go lower. But we can see right here, 19,700, right at that closure there for the gap that we had that was filled by the CME gap. That's the support level for now. Okay, so 19,800 roughly is a very close approximate to where we should see the price action stay for a little while. If it pushes lower, we'll have to deal with it. Okay, so again, not fantastic, not doom and gloom. This is very standard stuff. Unfortunately, you kind of get used to this if you spend some time in the market, and it does suck sometimes. It's not always a bed of roses. Okay, but try not to get defeated, and try not to I don't know, just don't let this ruin your day. I know it's easier said than done. I've taken a lot of losses in my day, and I took a loss here. That's the way it goes sometimes, okay? But if you take a loss, get back up, and try again, and continue to persevere, become better than you were yesterday, that's the important thing. You gotta learn from your mistakes. Write down the stuff that you did wrong here, and learn from it, and make sure to fix that. Don't point fingers at anyone else just because you decided to follow what they tried to do that they thought was right, okay? Again, you got to take ownership in this game here, and the most effective thing you can do is to learn from those mistakes and make yourself a better person, okay? That's the beautiful thing about trading. It really defines you as a person. It helps you get to that center. Some people are not suited for this. You're not cut out for trading. There's just no other way around it. You can't treat it like gambling. You treat it like a business. You learn and you move on, okay? All right, anyways, hopefully that helps make sense. I hope that you had learned something here today. Thank you so much again for joining me here. We'll look forward to seeing you on the next video. Have a great rest of your day. Take care.